Welcome. In this video, we'll Xcn coin attack again. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When the charts are examined closely, it becomes clear that the price movements are forming a highly characteristic structure. In particular, the recent trend in price action points to a falling wedge pattern, which carries highly positive implications in technical analysis. This formation is one of the key technical structures indicating that the ongoing decline in the market is weakening, selling pressure is diminishing, and a potentially strong upward move may be in its preparatory phase. Especially if the price is approaching the upper boundary of this wedge structure, it signals that exciting developments may be on the horizon for investors. The falling wedge pattern typically forms with lower highs and lower lows, gradually narrowing over time. This narrowing reflects decreasing indecision in the market and suggests that momentum is beginning to build for a potential upward move. As the price moves within the wedge, it creates tighter swings between highs and lows, becoming compressed within a narrow range. However, when this compression ends with a breakout, the price usually turns sharply and decisively upward. This is because the nature of the formation reflects a stage where the decline is no longer sustainable, and buyers are beginning to take control. The fact that the price is currently very close to the upper boundary of this falling wedge pattern raises the possibility that a breakout could occur soon. If this upper trend line is broken to the upside with strong volume, it is considered a highly bullish signal in technical analysis. Wedge patterns typically trigger an aggressive upward move after a breakout, providing significant profit opportunities not only for short-term traders, but also for medium-term investors. The price being squeezed upward within such a narrowing structure also carries important psychological signals for the market. Investors at this point are starting to see that declines are becoming limited, sellers are gradually losing strength, and buyers are increasing their demand. This psychological shift, when combined with the technical signals of the formation, increases the likelihood of a strong upward price movement. Especially a breakout supported by volume indicates strong buying appetite and suggests that a new upward trend could be beginning in the market. In addition, the potential price targets that could emerge following the breakout of a falling wedge are also highly promising. Typically, the target after such a breakout is the highest point at the start of the wedge. This represents a target significantly above the current price level and offers a major potential profit opportunity for investors. If the breakout is supported by volume, reaching this target in a short period becomes highly likely. A breakout from this wedge pattern could also trigger many investors' stop-loss levels, creating a short-term short squeeze effect. This could contribute to a faster and more aggressive upward move. At this point, the most important thing investors should pay attention to after the breakout is confirming whether the breakout is genuine or false and shaping their positions accordingly. However, the current technical structure and market psychology suggest that this breakout could bring about a strong upward movement. Another key feature of falling wedge formations is that they generally appear at the end of downtrends. Therefore, a successful breakout to the upside may not only indicate a short-term move but could also signal a trend reversal. For this reason, investors should pay close attention to such formations and carefully analyze the process to identify potential opportunities. These breakouts are especially valuable for investors looking to enter positions at the beginning of a new upward trend. But we can't base our analysis solely on the wedge. Let's take a look at other metrics as well. Stay tuned. One of the most notable developments in the charts is that the price made a very sharp and decisive downward move at a certain point. Such sudden drops are often the result of emotionally driven decisions by market participants and typically represent short-term panic selling. However, these moments of panic often signal that a trend is nearing its end and that a strong countermove may be imminent. In financial markets, every sharp move is often followed by an equally strong correction or a reaction in the opposite direction. In the current situation, it is not far-fetched to suggest that the market may be preparing for an upward rebound following this steep decline. The rapid pullback in such a short time also represents a major opportunity for investors. In these situations, savvy and experienced traders often apply a buy low, sell high strategy. Especially when the price has dropped into the oversold zone on technical indicators, it suggests that selling pressure has diminished and potential buyers are beginning to step in. This points to a high likelihood of an upward move beginning soon. Indeed, when looking at historical price actions, we have repeatedly observed that sharp, sudden drops are often followed by similarly strong and sudden rallies. Sudden declines also tend to result from the triggering of stop-loss levels for short-term traders and speculators, leading to high-volume sell-offs. This creates a temporary panic atmosphere in the market, pushing prices quickly towards support zones. However, such moments of panic are usually short-lived. As market participants regain composure and fundamental dynamics come back into focus, a recovery process begins with the re-emergence of buyers. This recovery is often quite strong. Once sellers exit the market, supply diminishes, and even small waves of buying can lead to large price movements. In this context, the fact that the price has pulled back so sharply and noticeably can be interpreted positively from a technical analysis perspective. With this decline, the price has reached previously untested support zones, increasing the likelihood of a bounce. If these support areas are historically significant levels where price has reversed upward before, the resulting reaction could be much stronger and more impactful. Additionally, if there are signs that large players have been accumulating during this drop, it could also signal an upcoming rally. It is also important to pay attention to candlestick formations that emerge after such sudden drops. If bullish candlesticks such as a long-tailed pin bar or bullish engulfing start to form immediately after the drop, this suggests that the market is signaling a reversal. Especially if these patterns emerge with increasing volume, they provide strong confirmation of a potential upward move. These candlestick formations reflect a significant shift in investor psychology, indicating that sellers are losing control and buyers are entering the market with strength. Furthermore, the recovery movements that follow sudden drops often turn into short-term opportunities with high profit potential. Many investors adopt a wait-and-see approach after such steep declines, hoping to benefit from the upcoming rebound. When the price bounces upward from a strong support level, these waiting investors quickly begin opening positions, which causes the price to gain momentum rapidly. Buy orders tend to cluster around breakout points, further supporting the upward move. From a market psychology standpoint, this decline also creates an opportunity. Sharp drops often cause unnecessary fear in the market while simultaneously offering many investors a clean reset point to re-enter positions. In the world of technical analysis, MACD is one of the most powerful and reliable indicators used to understand the momentum of price movements. Crossovers, especially near the zero line, can herald significant changes in the direction of the markets. One of the most notable developments in the MACD indicator at the moment is that the signal line and the MACD line are very close to making a crossover just below the zero line. This is considered a very positive sign in technical analysis. This is because such crossovers are usually a harbinger of a new uptrend and prices are likely to gain upward momentum. A MACD cross below zero tells us that momentum has turned from the downside to the upside and bearish pressure is starting to weaken. At this point, sellers are pulling out of the market while buyers are slowly taking control. Especially if this intersection occurs at strong support zones in the past, this indicates that the uptrend will be stronger. This is because support levels are critical areas where buyers are concentrated and the market is revitalizing. Therefore, this movement in the MACD strongly implies that the price is regaining strength and may soon make an upside move. We should wait for the MACD cross. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.